What's up, everybody? In this video, we're diving deep into the world of international ETFs, your secret weapon for 2025 and beyond. Now, you've probably heard me talk about diversifying your portfolio, and I'm not just talking about different stocks, I'm talking about going global. See, while the US markets are great, there's a whole world of opportunities out there just waiting to be tapped into. Think about it, emerging markets with explosive growth, developed economies with stable returns. It's like adding a whole new dimension to your investment strategy. So, in this video, we're breaking down my top 5 international ETFs for 2025, giving you the insights you need to level up your portfolio and potentially see some serious growth. First up, we've got a real heavy hitter, the Vanguard FTSE All-World ex-US ETF, or VEU for short. This ETF is a powerhouse in the world of global investing, offering a unique opportunity to tap into international markets with ease. This bad boy trades on the New York Stock Exchange, so it's super easy to access, whether you're a seasoned investor or just starting out. The NYSE is one of the most prominent stock exchanges in the world, ensuring liquidity and ease of trading for VEU. And it's designed to track the performance of large and mid-cap stocks in developed and emerging markets, excluding the US, of course. This means you're getting a broad exposure to a diverse range of economies and industries, from tech giants in Asia to industrial leaders in Europe. Think about it. Europe, Asia, the Pacific, this ETF gives you exposure to all of it. Imagine having a stake in the bustling markets of Tokyo, the innovative hubs of Berlin, and the growing economies of Southeast Asia all in one package. And with a low expense ratio of just 0.08%, you get to keep more of your hard-earned returns. Expense ratios can eat into your profits, but VEU's minimal fees mean more money stays in your pocket, compounding over time. But here's the kicker. VEU currently holds over 3,400 stocks, giving you instant diversification. This vast array of holdings spreads your risk across multiple sectors and regions, reducing the impact of any single market downturn. It's like having a little slice of the entire world in your portfolio. Whether it's the booming tech sector in South Korea or the robust financial markets in London, VEU captures it all, providing a balanced and comprehensive investment approach. Now, past performance isn't everything, but VEU has delivered an average annual return of around 7% over the last 5 years. This consistent performance highlights the potential for steady growth, making it an attractive option for long-term investors. That's nothing to sneeze at. A 7% return can significantly boost your portfolio's value over time, especially when combined with the power of compounding. Of course, you know me, I always say do your own research, but VEU is definitely worth a closer look if you're serious about global diversification. Dive into the details, understand the holdings, and see how it fits into your overall investment strategy. With its broad exposure and low costs, VEU could be the key to unlocking your portfolio's global potential. Next up, we're heading straight into the heart of emerging markets with the iShares MSCI Emerging Markets ETF, or EEM. This ETF is designed to give investors exposure to some of the fastest-growing economies in the world, providing a unique opportunity to diversify and potentially enhance their investment portfolios. Now, I'm talking about countries like China, India, and other powerhouses in the global economy. These nations are not just growing, they are transforming at an unprecedented pace, driven by rapid industrialization, technological advancements, and a burgeoning middle class. Brazil, economies that are on fire right now. With their rich natural resources, expanding consumer markets, and increasing political stability, these countries are becoming key players on the global stage, and EEM gives you direct access to that growth potential. By investing in EEM, you are essentially buying a piece of these dynamic economies, positioning yourself to benefit from their upward trajectory. This ETF trades on the New York Stock Exchange under the ticker symbol EEM, making it easily accessible to investors around the world. Whether you're a seasoned investor or just starting out, EEM offers a straightforward way to tap into emerging markets, and it tracks the performance of large and mid-cap stocks in over 20 emerging market countries. This means you're not just investing in one or two countries, but a broad spectrum of economies, each with its own unique growth drivers and opportunities. And let me tell you, these markets are hungry for growth. The potential here is enormous, with many of these countries experiencing double-digit growth rates in various sectors. from technology to consumer goods. We're talking about a whole new generation of consumers with rising incomes and a thirst for products and services. This demographic shift is creating a massive demand for everything from smartphones to automobiles, and EEM positions you to capitalize on this trend. Now, I'll be real with you. Emerging markets can be volatile. Economic and political uncertainties can lead to significant fluctuations in stock prices. However, this volatility also presents opportunities for savvy investors who are willing to ride out the ups and downs. But that volatility also comes with the potential for massive returns. Historically, emerging markets have outperformed developed markets during periods of economic expansion, offering substantial gains for those who can navigate the risks. EEM has an expense ratio of 0.68%, which is a bit higher than VEU, but still very reasonable considering the growth potential. This fee covers the cost of managing the fund and provides access to a diversified portfolio of high-growth stocks. If you're looking to add a little spice to your portfolio and tap into the next wave of global growth, EEM is definitely worth considering. By investing in EEM, you are not only diversifying your portfolio, but also positioning yourself to benefit from the dynamic and rapidly evolving landscape of emerging markets. So, why not ride the wave of emerging market growth and see where it takes you? Alright, so maybe emerging markets aren't your thing. Maybe the volatility and unpredictability of those markets make you uneasy. And that's completely understandable. You like a little more stability, a little less risk. I get it. You want to sleep easy at night knowing your investments are in safe hands. That's where the SPDR Portfolio Developed World ex-US ETF, or SPDW, comes in. This ETF is designed for investors like you who prefer a more measured approach. This ETF, listed on the New York Stock Exchange under the ticker symbol SPDW, focuses on developed markets outside the US. It offers a unique opportunity to invest in some of the world's most stable economies. Think about countries like Japan, the UK, where the economies are robust and the markets are well regulated. Germany, established economies with stable governments and strong businesses. These are places where you can expect steady growth and reliable returns. Now, I know what you're thinking. Developed markets, they're not exactly known for their explosive growth, right? And you're right, they might not offer the same high-risk, high-reward potential as emerging markets. But that doesn't mean they're not a good investment. In fact, the stability they offer can be incredibly valuable, especially in uncertain times. But that doesn't mean they're not a good investment. SPDW gives you exposure to well-established companies with solid track records and consistent dividends. SPDW gives you exposure to well-established companies with solid track records and consistent dividends. These companies have weathered economic storms and come out stronger on the other side. It's like the reliable, steady Eddy of your portfolio. You can count on it to deliver consistent performance without the wild swings. Plus, with an expense ratio of just 0.04%, it's one of the cheapest international ETFs out there. Low fees mean more of your money stays invested, working for you. It's one of the cheapest international ETFs out there. So you get the benefit of diversification without the high costs that can eat into your returns. So if you're looking for a way to diversify globally without taking on too much risk, SPDW is definitely worth checking out. It offers a balanced approach to international investing. SPDW is definitely worth checking out. It provides a way to tap into the growth of developed markets while maintaining a level of safety and predictability. In the world of investing, that's a combination that's hard to beat. Who doesn't love a good dividend? I mean, getting paid just for holding an investment? Sign me up. And that's exactly what the Invesco International Dividend Achievers ETF, or PID, is all about. This ETF, trading on the New York Stock Exchange under the ticker symbol PID, focuses on international companies with a proven track record of paying and increasing dividends. We're talking about companies that are committed to returning value to their shareholders year after year. Now, PID's expense ratio is a bit higher than some of the others on this list, coming in at 0.56%. But remember, you're getting paid dividends, which can help offset that cost. Plus, PID gives you exposure to a diversified portfolio of high-quality, dividend-paying companies from around the world. It's a great way to generate passive income while still participating in global market growth. Last but not least, we've got the Schwab International Equity ETF, or SCHF, the perfect option for budget-conscious investors. This ETF, listed on the New York Stock Exchange under the ticker symbol SCHF, tracks the performance of large and mid-cap stocks in developed and emerging markets outside the US. But here's the best part. SCHF has an incredibly low expense ratio of just 0.06%. That means you get to keep more of your returns, which is always a good thing. Now, SCHF might not have all the bells and whistles of some of the other ETFs on this list, but it's a solid, low-cost option for investors who want broad exposure to the international market without breaking the bank. So there you have it, my top 5 international ETFs for 2025. From emerging market growth to stable developed economies, dividend payers to budget-friendly options, there's something for everyone. But remember, this is just a starting point. Do your own research, consider your risk tolerance, and choose the ETFs that align with your investment goals. And hey, if you found this video helpful, hit that like button, subscribe to the channel for more investing tips, and let me know in the comments which ETF you're most excited about. Thanks for watching.